Well, hello. I just want to come in and give a 2-month update on the 3X growth strategy, which is the blueprint I use to double my money quickly. And for those watching this the first time, you don't know who I am. My name is Travis Wilkerson, the former U.S. investing champion for the futures and options division, but I go by Trader Travis online. So as I stated, I want to come in and give a 2-month update here. So the first month after placing this trade, I initially opened this on January 26, 2021. After 1 month, I was already up 12%, and the stock in that time frame was up 1%. However, for those who've been paying attention to the stock market, we're in the middle of a small correction of about 5%. And this triggered a red weekly trade triangle, which signaled to us that the stock may potentially fall in the next few days, 2 weeks. Now, before I cover my trade, a quick mindset lesson here. A lot of people will get introduced to the software and they will run into situations like this back where the MarketClub had a red weekly, it went down for a few days and it reversed quickly. Or these where it goes down one day and then the next few days it goes up. And so they will get discouraged and they're like, oh, this doesn't work, right? And they get all upset thinking that it whipsawed them in and out of trades versus just unemotionally following the signals. It told you to get back in, get back in. Stop being a whiny little brat, speaking from experience, right? Just get back in, you'll be okay. Here's why. If you ignored all the whipsaw movements, you would have participated in all of this movement. Right? Yeah, you would have had a few days of annoyance, but if you got back in like the signals told you, you would have participated in the majority of this upward movement. Second mindset tip here is that I don't care about the few. Personally, I don't care about the few times I get whipsawed in and out of positions. If the trade triangles, and to date, they have absolutely never failed me when I really needed them. What I really need them for is to make sure I get out before ugly crashes like this. You can pull up any stock chart, of the broad-based indexes, Dow, NASDAQ, and S&P, overlay the trade triangles to see if they protected you in any crash, right? So this is the bear market of 2020. You can see it got us out way before the crash. Even if we zoom here to the 5% correction, it got us out in enough time so that for those who are using the weeklies, right, I'm using mostly monthlies, but for those who are using weeklies, you see that it got you out in enough time to prevent a major loss. So that's what they're really for. Forget the whole annoyance, every now and then you get whipsawed in. You just want to make sure they work when you really, really need them. In this case, they did. Anyway, let's come back to the 2-month update. You saw the chart. The market is in the middle of correction. So people are like, well, Travis, are you making money or losing money? 2 months after entering this, I am losing money, right? Doesn't bother me one bit. I'm only down 16%. So it works in reverse as well. The market was down 1% from the start of this case study. Now my position is down 16% or a $366 loss. That's common. I mean, you don't always make money. And actually, at the end of this update, I'll share my thoughts on losing money here that I recorded for another training. But I'm losing money. And so let me actually show you these trades in the broker platform here. Oh, I forgot. I told you I have a bonus trade here. So the 3X growth strategy, again, is a blueprint for how to double my money quickly. And I just gave some examples here. I'm using about $2,000. And so if I double my money a couple of times in a year, this is what it would look like. 2,000 will turn into about 8,400. And that's actually based on the reality of what I've already done. Let me pull that up because you'll see here in a second the case study that this is based off of is based off of what I teach in the MarketClub Options program. Let's see if I have that members area pulled up. So here's what the MarketClub Options members area looks like. And this link down here is just a link to my trade journal Excel that I update as close as possible to real time. So I have a real money case study in there. January 5th, I invested $2,100. And then, it doubled my money, compounded, reinvested profits. And then in June, I invested about $8,000. And so what you see here is actually based on the reality of what I'm doing. But anyway, the summary is if things worked out and the market kept going up, this is the potential. $2,000 could turn into $16,000. And that's the equivalent of $10,000 turning into $80,000. So that's what this bonus trade here is. About a couple of days after starting this case study, I said, you know what? Sometimes the smaller numbers don't inspire or motivate people. They should. Don't focus on the percentages, not the dollar amount. If you can find a strategy that allows you to double your money, at least once a year, you're good. Not your account. You're not double your account. I'm not teaching that, but doubling my money in a certain strategy, right? So anyway, I went ahead and invested $10,000 too. So I'm going to run 2 case studies side by side, but I will not update the Microsoft Word document here. The Word document will just focus on the original case study where I invested $2,000. But every time I record these updates, I'll show the $10,000 version too. In the $10,000 version, it's a bigger investment. It's losing more money, $1,500, and that is the nature of trading a bigger account, right? It's the price you pay for wanting the bigger gains. Well, what comes with bigger gains are bigger losses. So that's all I have. Just a short update showing you what very few, if any, quote unquote option gurus online will show you: the reality of trading. Losing money is a part of all successful investing, right? And I'm about to load up a segment where I share some of my thoughts on losing money, but there's nothing to do here. It's a red weekly. I exit on a red monthly. So it's just an annoying loss I have to look at while I wait for the market to recover. And I have full confidence that the market will recover because the market is undefeated. No matter what you throw at it, it always recovers and goes back up. It's not a guarantee it will always do that in time, but that's a statistic I am willing to put my faith in. So now what I want to do is this 3X public 3X case study update is over. So I want to share a snippet. You'll see me review the primary one that's taught in the MarketClub Options. I'll look at the profitability because you'll see the difference, right? That leads to a point of timing is everything, right? I entered here in July this new case study and I'm losing money, but the case study I entered in January is still actually making money despite the correction, and you'll see that. So this is a snippet of another training I recorded for the program I have that's now closed. It's called the Success Academy. So we're just giving some thoughts and updates on the private version of the 3X growth strategy, as well as my thoughts on this correction and my thoughts on losing money. So I'll end with that, and I hope you find at least one nugget of wisdom in my rambles. So you take care, and I'll see you next month in the third update of this public 3X growth strategy case study. Take care. Talk to you soon. Bye-bye. And I'll touch on the general market first, and then I'll circle back to these trades you're looking at right here. So the S&P, I'll just look at the S&P. We're still in correction territory, still around the 5-ish % correction, which is just standard. It doesn't have to be 10, and we talked about that. The market corrects on average 10% every year, but sometimes the corrections are 5, sometimes 15, sometimes 20, but they average them out, and it comes to around 10-ish, but it's never precisely 10% correction every year. It's, it varies. So whenever the market corrects about 5%, that's, what they consider correction territory, which is normal ebb and flow. It's not even up for a discussion. It's just normal ebb and flow. So I struggle with why people make it such a big deal. But that's because my mindset has shifted now, to a more professional stance or more mature stance of how to evaluate the market instead of looking at it like a casino and it's a gamble and it's a game and it's fun. Well, I mean, making money is a game. You have to learn to play the rules, but still. The point is, I don't consider stuff like this topics for discussion. Maybe a 20% correction in a month, like in 2018. At the end of 2018, yeah, that was up for discussion because that was crazy, or the bear market in March in 2020. So normal correction, it may be finding some bottom movement. There have been some extremely high volume days here on the down days, and so I like to look at it as the market scaring everybody out, and as soon as it scares everybody out, that's when it starts going back up. But looks like it slowed down a bit. Maybe it might touch the 200-day moving average. I don't know, the last time it's done that, it's been quite some time ago. The last time it actually touched the 200-day moving average in a correction was June 2020, and that was after the bear market. Before then, we would have to go back further than 2 years, which I'm not going to do because going back further than that is irrelevant for what we do as short-term traders. So it is below the 30 though, and so it's in correction territory. And it doesn't look like the 30 or the 7 is starting to turn up yet. But I anticipate that happening soon. I just don't know when. But other than that, I'm going to sit tight. All right, my trades. I finally have, it took October, so it took my took 10 months for me to hit my first losing trade of the year, right? 10 months. So what, and let me see, how many trades should I make? Let me count the grays. I'll show you something that I thought about. 1, 2, 3, 4, 5, 6, 7, 8. So I made, so out of the 8 trades I've already placed, no, out of the 9 trades I've already placed, 8 were winners. So 8 divided by 9, that makes my success rate what? 88%. And I thought about this because most traditional option sellers or most traditional option gurus will tell me I am absolutely ridiculous and stupid for selling in the money credit spreads. They were like, "Yeah, you're just going to lose money, low probability, everything's about high probability." And Peter had a lesson on that, I believe, a while back. Pretty much, if you come, let's say we're selling a 45-day credit spread and we come way out of the money here, you're only going to get like $17 here. All right, and you can possibly lose 70 or 80-ish dollars. But the thing that people will brainwash you, because it is brainwashing, you'll hear it everywhere online. High probability option trading, is that you have a high win rate of 80 to 90%. They're like, yeah, but you're going to win on 80, 90% of your trades. And so it caters to this emotional need of people to always be right, to always win. It's pointless. That's, I don't know any billionaires, but I can imagine if I walked up to a billionaire and say, "Hey, did you become a billionaire engaging in financial transactions where you can make $1 but lose 4?" Isn't that stupid when you look at it from a very logical perspective? I want to engage in a bunch of transactions where I can make $1, but I can lose 4 when I'm wrong. That's how I went bankrupt in real estate. Like, the math just doesn't work. I don't care about probabilities. The math is just not smart, in my opinion. And people learn that when they do this, and they wind up having one losing trade, or they encounter a bear market, and then they lose all the money they've spent like 10 months earning. And then you think, yeah, but you have to keep doing it because the probability is working in your favor. Yeah, but they're freaking terrified, right? So it doesn't match up with the human psychology. Like, people are freaking terrified to trade in the middle of a bear market when they've just lost 11 months of profit in a matter of weeks, right? They're just too scared to keep doing that and keep putting faith in that strategy. So this long-winded rant is about the fact that, guess what? Me being an idiot is what they would call me, selling in the money spreads because they have a better risk reward. I can make $1, lose $1, right? They would say, "Oh, you have a low probability, most of your trades will be losers." We have the same win ratio, 80, 90%, but 2 different styles. And who's in a better situation, in my biased opinion? I have an 80% win rate, but my one losing trade I had, did it take out all the $1,300 profit I earned so far for the year? Nope. It just sucked out a little bit of it. But if I had traded out of the money credit spreads, that my one losing trade I had last week would have wiped out all of the profit I made so far this year. So don't get caught up on win rates and all that. Focus on the numbers. Engage in transactions where you can invest $1 but make 5. That's like the 3x growth strategy, call options. Speaking of the 3x growth strategy, let's go ahead and look at it. Someone else might ask, well, Travis, what about the 3x growth strategy? How's that doing? Well, let me show you here. It is making money. It's up 20% or $1,700. It was up, of course, more like 40, 50% before the correction. But look at that. I am still up $1,700 despite a correction. This leads to the last lesson before I turn it over to Peter, is that when I started modeling this on YouTube, a public version of this, the public version is actually losing money. I think it's down like 12%. And someone was like, "Look at this guy placing trades at the market's all-time high." And we have a good relationship, so he wasn't like making fun of me, but he was saying that the best time to buy these call options are when the market's correcting. And I was like, yes, that is actually correct. The best time to buy a call option is when the market's, or the long-term leap call options, or when the market's correction at the bottom of a bear market, things like that. But the challenge with that is, and what I explained to him, is that there are people who waited all year for this correction to finally deploy cash. I started deploying cash back here in January. So while they waited to deploy cash for the best time, I started making money. They waited. I made money. Who's better off, right? I've already compounded the money, and that $1,700 profit you just saw is based on like a $8,000 investment. And I only started with, I think, $2,000 investment. I think I could show you. I have the Excel right here. Yeah, $2,000. I only started with a $2,000 investment, and now my current trades are about 8,000. That's because I was compounding the profits. So I've already grown that money in the same time period that some people waited, and that's the challenge with waiting, is that you don't realize there's an opportunity cost to waiting. You're so hyper focused on, this is not the best time, I got to wait till they're cheaper. Yeah, but while you're waiting, I'm making money because the market goes up more than it goes down. Think about that. The market goes up more than it goes down. So why are you waiting for something that only happens 5 to 10% of the time? Just engage in what happens 80 to 90% of the time, and that's the market going up. And that's also why I don't stress about market crashes, and people, like, they're always like telling me and trying to get me to focus more on market crashes. And I'm like, they're irrelevant in the grand scheme of things. They literally only happen 10% of the time. With the strategy, you got 90% of your money in cash. Like, there's nothing to stress about. 90% of your account is protected. Why are you stressed, right? But anyway, they don't happen that often. So my biggest lesson I can teach people and try to convey is that, one, try not to stress about an event that rarely ever happens. Two, shift what you're stressing about. People, and I'm speaking from experience, we have this naive, almost childish desire to never lose money, right? We want all the gains without the losses. That's the equivalent of like believing in Santa Claus and the Tooth Fairy, right? So shift the desire to let me lose money in such a way that it doesn't destroy my account, right? When you shift your desire that way, you go from being irrational, like Peter and I just talked about it before we hit record. He talked about, he asked me, do I still have that temptation to close credit spreads early? So let's come back to the cash flow strategy, right? The market's in the middle of correction. This trade, the one that expires in 24 days, is actually profitable, $100. And so he's asking me, do I still have that temptation, that fear, like, let me close this and book that $100 profit before it turns into an actual loss, a losing trade? I'm like, yeah, I still have that fear. I just ignore it, right? Over time, you ignore the little freaking monkey brain stuff that comes in your head, right? No, I still feel that. Same way I feel like I don't want to lose money like anybody else. It's annoying. But I recognized a long time ago, when I shift my focus from, it's not about not losing money. It's what am I really scared of? I'm scared about losing everything. So let me learn how to gracefully lose money. Let me learn how to lose money in such a way that it doesn't destroy me. And once I can put myself in that position, I don't have to stress about the losses anymore. I can just let them come to me. Why? Because every loss, it's like, hey, I've already put myself in a position where the loss won't destroy my account. I can gracefully accept the loss, and then I can move forward and focus on what happens 80 to 90% of the time, and that's the market going up. That's why this one loss right here, this is an example of it. I wasn't in a position to lose all the money I had in my account or all the profit I've earned. It's just one loss. It ate into my profit a little bit, but I can gracefully accept it, and I can maturely move on to focus again what happens 80 to 90% of the time, and that's the market going up. So with that, I am done. Now let me turn it over to Peter.
But I do need to challenge you on something.
Mm-hmm.
There's no Santa Claus or Tooth Fairy?
Don't tell my kid, my youngest. Oh, man.
Well, no, that was fantastic, because I asked Travis that about how he feels, because I'm the same way. It's such a normal reaction. And I think the way you put it best was what you said about the probabilities, that people, it's so easy to sell people on something that is going to tell them they're always right, or they're right a majority of the times, because we don't like being wrong, right?
Yeah.
So that's a great way to put it. But yeah, when you come back to full circle of that high probability options trading, and if you go to my YouTube channel, you'll see I did a free case study with Netflix, and I actually made really good money, but I implemented what I was taught in the Success Academy and using Market Club to stop doing it at the right time. And had I continued to do it, one losing trade not only would have wiped out my profits, it would have wiped out my account, because I was risking like $60,000 to make 600 or 700. It was ridiculous.
Wow.
So yeah, crazy, right? So high probability options trading, the only thing they don't really marry up with that is, yes, you have a high probability of winning. The unfortunate part is the negative that marries up with that strategy is the amount of risk you are taking, and that low probability of that risky trade wipes out all the high probability action, whereas your results is clearly the opposite.